Last week's CPI report showed that core inflation, the thing the Fed cares about, is trending in the right direction and is lower than where it was last year. Though, looking at the 10-year yield or mortgage rates, you wouldn't know that. As of this morning, 9 Fed presidents have come out publicly trying to talk the bond market down. So it's very obvious, at least to me, we are nearing an area with rates that the Fed is uncomfortable with. And I think it's very unlikely rates go much higher, if at all, from here. Even with rates up near 8%, the number of people applying for mortgages this week actually increased. How are these high rates impacting buyers? Will home prices ever come down? And what does all of this mean for the Dallas real estate market? My name is Michael. I'm a real estate agent in the Dallas area, and every Monday I give you a weekly update covering all of Dallas and Collin counties. We're looking at trends, which cities and zip codes are the hottest if you may be a seller looking to get top dollar, as well as which cities and zip codes are the coolest if you may be a buyer or investor looking for a deal. We're tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand will look like 30 to 90 days from now. We're looking at things like median list price, days on market, how many homes are having price decreases, what's inventory looking like. And if you stick around until the end, you'll see my favorite part of the video. It's the top 10 rank charts of the hottest and coolest, both cities and zip codes in all of Dallas and Collin counties. If this sounds like something you're into, make sure to hit the subscribe button. And if you're looking to make a move in the Dallas area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All that info is in the description below. Okay, today is October 16th. Let's see what the data is telling us. And if this is an old video, you can click the playlist here and it'll take you to the latest weekly market update. First up is market news. Last week's CPI report was good news because core inflation is trending down. Last year, CPI core inflation was at 6.3% and shelter inflation was even higher. Currently, core inflation is down to 4.15% and dropping, as you can see here. But what you might not know is that the shelter component is actually 44.4% of CPI. And if we look at the shelter component here, you can see that in order for CPI to come down, this shelter inflation has to come down big time. In fact, if you remove this shelter component right now, core CPI was only actually up 0.1%. So basically, 4% of the 4.1% inflation is all from shelter, is all from rents being too high, it's all from the housing market. Some other big news is that core inflation is now lower than the federal funds rate. This means that if you were to buy a treasury bill today, when it comes time to claim your interest, you will actually end up with more money in value than you started with. Whereas before, if you bought a treasury bill at 2% and inflation was at 9%, then you would have actually been losing a ton of money or value by holding those treasury bills. So this is a very important change as well, as it means things are as they should be. It should make sense for you to hold a treasury bill that should outpace inflation. Otherwise, why would you hold one? So with all this good news, why are mortgage rates not cooling off and why does the Fed still sound hawkish? Well, one is low jobless claims have been holding us back. Essentially, inflation is looking good, but now the problem is too many jobs, too much wage growth, too many people employed making too much money. So the growth rate of inflation is slowing nicely, but they also want to attack the labor supply to ensure that wage growth doesn't get out of control. The second is the war in Ukraine and now the war in the Middle East. Basically, when there is global uncertainty, people will move their money into safe haven investments like treasury bills, as it's the most secure investment in the world. But still, in my opinion, we are past the worst of it. Inflation is coming down as expected, and unless jobless claims start declining or either war drastically escalates on a global scale, I don't see anything else that would make mortgage rates continue up higher than where they are now. Now, I also expect them to stay high for a long time, but I don't expect them to go much higher from here. The only side note to this is the spreads seem to be getting worse. A quick example of what that means is back here at this top of this candle right here that you see. This was on October 6th. That was the previous high in mortgage rates. That was when we got to a 7.81%. Today, the 10-year is way down here, yet we're at about 7.8% rates. So the 10-year is coming down, yet mortgage rates are about where they were when the 10-year was here. That means the spreads are getting worse on the 10 and 2-year. Because normally, as the 10-year goes down, mortgage rates go down. As we see here, the 10-year went down, mortgage rates went the same. Okay, let's move on. Let's start with national housing inventory. We saw a decent jump in active listings week over week with an increase of 9,418 homes in the country compared to last week's increase of only 2,286. However, we are still 20,702 homes short of where inventory was this time last year. Last year, the seasonal peak in inventory was right here at 578,000 homes on October 28th. So we have just under 2 weeks of seasonal inventory increasing until we start to decline for the year, if last year is our example. However, However, of course, if mortgage rates continue to climb, I would not be surprised at all to see inventory increasing even later into this year. So we actually started last week at a 7.62, and we stayed pretty low until this week. We're jumping way back up, like I said, to a 7.8. You can see that reflected here, 7.8, where the previous high was 7.81, even though the 10-year is coming down. This makes 23 consecutive weeks of rates around or above a 7%. Now, regarding mortgage purchase applications, we actually saw a 1% increase this week. Though remember, the previous week was a 6% decrease. So this 1% increase barely helps with that, but it's definitely better than continuing to see a decrease. This makes for a total of 18 positive, 20 negative, and 1 completely neutral print so far this year. Home buyers are starting to understand that if they wait till later in the year to buy a home, they could be looking at 8% rates in just a few weeks from now. And it doesn't look like the Fed is going to be letting up on rates anytime soon, so the hope of getting a lower rate is not really there at this point. It's basically here or maybe higher. That's kind of your options. But remember, the rate is temporary. When rates finally do drop, you'll be able to refinance. And if you think just because rates are way up here at 7.8% that you can no longer afford a home, I promise you still can. There are still ways that anyone can get their rate and their monthly payment to a place that is affordable for them, and I made a detailed video on this that you can see here. So before you lose hope, make sure and watch this video. All right, let's quickly talk through the MLS data this week. Starting with Dallas County, we had 230 closed sales. That's 34 less than last week. 258 homes went under contract. That's 1 less than last week. 475 homes listed in the last 7 days. That's 37 less than last week. 73 of the homes that sold this week were immediate sales, meaning they contracted within the first week. That's 3 less than the previous week. In total, there are 2,055 homes either under contract or in pending status in Dallas County. That's 34 more than the previous week. Moving on to Collin County, we had 159 closed sales. That's 16 less than last week. 150 homes went under contract. That's 7 more than last week. 309 new listings. That's 9 less than last week. Of the homes that closed, 36 were immediate sales. That's 6 less than last week. In total, 1,636 homes are either under contract or in pending status, and that's 31 more than last week. So in general, we had a few less closings, about the same number of executed contracts, and less new listings, all of which can be expected this time of year. So basically, everything looks pretty normal. Okay, let's move on to housing data. We'll start by looking at Dallas County as a whole. If you've seen my videos, you'd know that what I look at is the market action index. It takes all of this info, puts it in one easy to read graphic with a number. We moved this week from a strong seller's advantage to a slight seller's advantage. The way this works is anything at 30 or below is a buyer's market, and anything above that, we're asking how much of a seller's market it is. So this is the first time all year that we've moved down to a slight seller's advantage instead of a strong. So quickly looking through the data, median list price fell a bit. So we went from $424 down to $419, $450. Again, that's list price. We don't have closed price on here, unfortunately. That data only comes out monthly. The median days on market jumped back up to 42 after seeing a dip last week down to 35. Number of homes having price decreases still in a normal range, which we'll cover here in a minute. Inventory continues to climb in Dallas. It's definitely accelerating faster than it has been throughout the year, which is good news for buyers. And the market action index, as we can see, above a 45, that was the strong seller's advantage. Now we're below. We're at a 44.23, which is just a slight seller's advantage. Let's start by looking at the number of properties having price decreases. So this week we had 45.23% of homes, but before you get ahead of yourself and think this means a market crash, this time last year we had 45.37%, so we're actually still a little bit lower than we were last year. As well as you can see, 2019, our last normal year, was at 46.29. So we're in a totally normal range for this point of the year. Now, the big news I want to show you here is inventory. So we've actually been climbing at a pretty decent pace. And if we look at 3,206 homes, we're quite a bit above where we were a year ago, which was only 2,751 homes. Now, to get back to a normal market in 2019, we'd be closer to 5,167. So we're not much more than halfway there, but we're definitely climbing nicely. And I'm curious to see just how many more weeks in the year we'll climb, because as we said earlier, as of last year, we only have about 2 more weeks left to climb before things start curving down. But if rates continue to climb, then we should continue to see inventory building up. Now let's do the same thing over in Collin County, and Collin County is actually holding up a bit better. So Collin County is still a strong seller's market. As you can see, last week was a 45.02. It actually went up this week to a 45.34. The median list price has been holding strong for a long time, around that $599. And the median price of new listings is actually climbing. Their median days on market has been around 42 for a long time. Number of homes having price decreases we're about to cover in a totally normal range. their inventory has been much flatter than Dallas. Where Dallas has been climbing for a while, they've been pretty stalled out most of the year. So let's start by looking at that inventory. So they actually do have more than they did last year, but as you can see, it climbed all the way up till July and it's been pretty flat since. But they have 2,057 homes for sale, whereas last year they only had 1,909. So not much more, but it is more than a year ago. And back in 2019, you would have had 3,782 homes, though Collin County has been growing quite a bit since 2019. So I think to get to a normal market, you'd actually have to be quite a bit above this. Because, for example, a lot of Dallas County is already established and it's reselling homes. A lot of Collin County is a ton of new construction because it's growing in every direction right now. Now let's look at the same metric of the number of properties having price decreases. Again, Collin County looks to be heating up a little bit more than Dallas. Homes having price decreases just under 48%. A year ago, we were at 53%. So the market is holding up better this year than last year. And if we look back at 2019, we were at 50.1%. So less price decreases now than last year as well as 2019. Now, the main reason I believe Collin County is holding up better is because a ton of the sales are new construction and there are still a ton of really good incentives out there, whether it's low rates or whether it's just giving you a bunch of cash to use however you'd like. So if you're struggling with either cash to close or the monthly payment with high rates, new construction is probably the way to go for you. And be on the lookout later this week for a video. I'm doing a most affordable housing series where I just look all around the DFW Metroplex and look for the most affordable homes. As of now, I believe I'm going to be doing it by the number of bedrooms. So for example, I'm doing the most affordable 4-bedroom home in the DFW Metroplex. I'm going to be looking within 30 minutes of Dallas and then within 30 minutes of Fort Worth and see what we can come up with, including these incentives. Okay, now let's move on to my favorite. This is the top 10 ranked hottest and coolest, both cities and zip codes, in all of Dallas and Collin County. And this again is using that market action index number. Holding its number 1 spot is Carrollton, Texas at a 63.69, followed by Louisville heats up 1, Coppell cools off 1, Garland heats up 1, Richardson cools off 1, Irving and Grand Prairie remain. Balch Springs jumps onto the list at number 8 this week. Mesquite and Plano remain. The big news here is that Grapevine, Texas, after being at the top forever, has finally dropped completely off the hottest cities list. And in its place, Balch Springs jumps on at number 8. Now we like to zoom in and look at specific zip codes. The absolute hottest, surprisingly, is Garland, Texas, 75041, which is a 72.34. Followed by Carrollton, 75010, Carrollton, 75006, Carrollton, 75007. Are you seeing a theme here, as Carrollton is the hottest city? Followed by Irving, 75060, Grand Prairie, 75050, Louisville, 75067, Plano, 75075, Irving, 75063, and Richardson, 75081. Now we're moving on, doing the exact same thing, but we're looking at the coolest cities and zip codes. Leonard, Texas moves right back into a buyer's market. It was out for a few weeks just above 30. Now it's down to a 28.85. So that remains the coolest city, followed by Sunnyvale, Whitewright, Salina, Van Alstyne, and Ferris, all holding their spots this week. Farmersville jumps onto the list, Seagaville jumps onto the list, Rockwall heats up 1 spot, and Royce City remains at number 10. So Farmersville and Seagaville jump on at number 7 and 8 and knock Anna and Red Oak off the list. The last thing I want to say is Royce City is the hottest city on the coolest cities list, and if you're looking for new construction as an investment, Royce City has the most options that I found. It's your best chance at cash flowing, obviously depending on how much you're putting down. They have some really great incentives. So if you're looking to invest in new construction, call me up and let's talk about Royce City. Now we're zooming in on the zip codes. The absolute coolest is Leonard, 75452, Sunnyvale, 75182, Whitewright, 75491, Dallas, 75254, Dallas, 75219, Rockwall, 75032, Salina, 75009, Van Alstyne, 75495, Dallas, 75212, and Dallas, 75208. All right, that's it for this week's video. Thank you for watching. As always, if you're looking to buy or sell in the Dallas area, just call, text, or shoot me an email. All that info is in the description below. Thank you for watching. I'll see you in the next video.